what's happening in the market. And the big story, of course, was that Nvidia came out with their earnings, and it is an amazing story. So I think we should give a little background about it for those people who aren't on the story, but it is really a market-moving story.
It really was. And actually, a lot of the reporters that I was speaking to this past week, they were asking about whether or not Nvidia was setting us up for disappointment, just because a lot of the investors out there have very high expectations of what they could deliver. Nvidia is the company that is really at the epicenter. They're at the center of the discussion around artificial intelligence. Right? If you think about the companies that really immediately benefit from it, it's the ones designing and building those semiconductors. And Nvidia, they have had tremendous growth, more than 200% in their earnings over the last year.
Earnings.
Yes,
just their sales
earnings
were even more than that.
Yeah, exactly. And part of it is because, you've got what we call the top line, that's the revenue growth, but then the bottom line, that's the earnings growth. The orders, the companies, if you think about the Microsofts, the Alphabets, the Metas, so also known as Facebook, Apple, the chips that they need to purchase in order to power all the analysis that they want to do and maybe package into the different products that they sell to consumers, they really need to go to Nvidia in order to get it. They can go to others, but it has been this interest in this tale of two economies, as Danny said, about Nvidia and the rest when it comes to these chip manufacturers.
And not only the economies, but in that industry alone. I know you're a health nut. You like to ride your bike. You like to run. You're probably not eating chips, but the chips are eating the world right now. And then it's really Nvidia. It's not really monopolistic, but the secondary player is a long ways away.
It really is. And one of the contrasts that I sometimes draw, just because people are familiar with it, would be like a company like Intel, right? I remember the days of Wintel. So you had your Windows operating system on the computer, and it was Intel inside. They've been really left in the dust when it comes to artificial intelligence, just because Nvidia, over the years, they were focusing on a special type of chip, these graphic processor units, whereas Intel was focusing more on these computational ones, these computer processing units. And it's the GPUs that Nvidia has really focused its history on that is really, really attractive to use for these artificial intelligence applications. And it's probably going to take a while for others to chisel away at this market dominance that Nvidia has.
And of course, they are really ahead of the curve, if you will. But it's not just the chip makers. You think about what's coming down the road with AI, and there's a lot of other industries. You think about, for example, just data centers that are being built. You think about, for example, commodities and materials, because there is such a great demand for electricity to run these plants. It really is going to be game changer.
Yeah, over the last couple of weeks, to me, it has been fascinating how investors shifted their attention away from maybe Nvidia itself and more to those other areas, like the copper area and electricity generation. Utilities, 2 weeks ago, that was like the best performing sector. I mean, it's usually this really
Which is usually not.
Yeah,
when you think about sectors, it's usually the one that's the bottom of the list.
Exactly. It's kind of boring. It's just plodding along, but people are like, oh, they're going to need power to power these things. And then the copper trade as well. If you're going to need more electricity, you're going to have to improve the grid, and that's going to require some copper. Copper prices hit record highs. Now, some of that, too, was this massive speculation that was taking place between the price of copper in China versus the price of copper in the United States. And so there were some hedge funds that were trying to really kind of play that price difference, and it created what's called a short squeeze, where they were on the wrong side of the trade, and suddenly they needed to start buying it up hand over fist.
And I don't want to get too far afield, but the short squeeze term is coming back because the meme trade is coming back. The memes are back in the news over the last number of weeks. But I want to go back to as a tale of two economies, and that really is the truth. You think about what we saw out of Walmart this past week.
Yeah, Walmart did quite well, beat expectations, but then you can contrast that with Target, which really missed expectations. And when I look at the health of the consumer, right, the average consumer is fine. But when you get into the details, it's really the high-end consumer, higher income consumer that is doing well, but beginning to trade down. And Walmart called that out on their earnings call, saying that higher income individuals are really beginning to traffic more at Walmart, searching for the bargains.
So you're not going to Saks Fifth Avenue anymore and just going over to Walmart? I find that hard to believe, Dr. Jacobsen.
Yeah.
But
I've stopped going to Goodwill.
That certainly is true, and we're starting to see that in those earnings reports. And the last thing I do want to cover is, of course, the Federal Reserve came out with notes this Wednesday. And one of the things that really struck me, and we'll save that for another day, but their discussion about this shadow banking system. I don't know if you saw that, Brian, but that is a shocking story, and we're going to have to talk about that as the time goes on. But lastly, the Fed is damned no matter what they do.
That's right. Yeah. If they try to hold rates where they are, they're going to be hurting lower income individuals. And it's also continuing to create problems in the housing market, which leads to then housing market inflation. If people are locked into their mortgages, these low cost mortgages, they're not bringing that supply onto the market. And so if they hold rates where they are, that's probably not the best situation. If they cut rates, is that then going to reheat things and reheat inflation? If they try to hike rates, what sort of more damage are they going to do? So they are really in a quite unenviable position as far as it almost seems like no matter what they do, they are going to make a bad decision.